Hello, YouTube, and hello, traders. Welcome to yet another video here. We're glad to have you back, and I hope you guys will enjoy our channel. And in today's video, we're going to be talking about how to swing trade for beginners. We're going to be breaking down 4 main steps in the process of what you need to know as a newer swing trader and what you need to know to swing trade options. So we're going to be breaking all these steps down, but before we do that, we're going to open up something to you guys. So if you guys have not yet joined, check out our free trading room, right? community.tradeproacademy.com, where we have a free Discord room for you guys to join. Now, today we had an amazing trader. One of our traders in our live room made almost 850% on a SPY call. So what we did was we picked the bottom on SPY and we picked the top in the live trading room, and our members in this free trading community had access to that where we traded live with them. So if you guys want to access trades like these and ideas like these, where we talk about futures, we talk about options, we do everything, and we answer your questions, just check us out, community.tradeproacademy.com. At the same time, if you guys are kind enough to smash that like button and that subscribe button, we'd really appreciate that so we can continue making content like this. So help us get to the next milestone of a big round number of subscribers, and we're going to open up the live trading room for you guys to check us out. So let's go through there and go through the intro, and we'll jump right into this. So what's up, traders? We plowed through that intro, and today what we're going to be talking about is how to swing trade options for beginners. Now, there's going to be 4 steps that I'm going to be talking to you guys about. Now, we're going to break these down. First, we're going to talk about the technical analysis, right? Then we're going to talk about the option selection, number 2, and also the Greeks and other variables. Number 3, what we're going to be doing is introducing options order flow for swing traders. And then number 4, what we're going to be doing is introducing that dark pool order for swing traders and how to understand dark pools, which is fairly similar to the order flow aspect. I'm just going to clump them together. So let's dive right into this. Now, in the technical analysis portion, what we've got here is a chart of AMD. So AMD here is one of my favorite names, right? It's a great mover. And what you need to know about technical analysis as a swing trader is going to be, right, you have to understand a strategy, right? A strategy that you have in place, that you have broken down, that you've back tested time and time again and see a certain success rate in it. So for me, it's going to be momentum breakouts on the swings. So that's based on patterns and also based on the volume profile and volume analysis along with order flow. So what I do with the breakouts on momentum is I'm going to find things that have bullish setup. So that means that breaking through a top, breaking through a bull flag, as we're going to explain what happened here today, breaking through a falling wedge, right? If you find a pattern that's going down in terms of market structure, and you can find the area where the lower high breaks out, that's one of my favorite reversal patterns, right? If you see a stock going up and then all of a sudden gets hit, and then some kind of inverse head and shoulders type scenario, that's another one. So in terms of technical analysis, we have to have a strategy that has a lot of backtesting potential, that we've tested a few times, that we know has worked and can continue to work, right? Has the ability to continue to work. So in terms of that, we also need to understand, right, volume profile and volume analysis. So if you want to learn more about all of these, just drop comments down below. You can come check us out at community.tradeproacademy.com. And we also have a few videos on our YouTube channel, but we're not going to dive too much in these. I'm just going to tell you guys that this is one of the main things that we need to know. And I'm going to explain how we came to this conclusion here for a potential shorter term swing on AMD. Now, the swings that we're talking about today aren't necessarily longer term. We're breaking down shorter term swings that last a few days, right? The holding period is ideally 1 to 2 weeks. And if you want longer term swing trade ideas and how to play those, just drop some comments down below. We'd be glad to make those for you. Now, the second part of the technical analysis is going to be the multi-time frame analysis. So what we've identified here is a bull flag scenario on AMD, right? And I've identified this area right here as the resistance. You can see the blue line because of the rejections that you'll see on the intraday mainly. So let's get rid of this. And I use the 1 hour as a confirmation tool here. So what I mean by that is the 1 hour, if we get a close above an area of a rejection, right? So a candle close, which is right here, with increasing volume into the close that's over the 9 EMA, then I consider that the confirmation. I start looking for other aspects for that trade. So you can see right here, we rejected once, right? Some traders may have waited for the ultimate breakout here, but we rejected once, tried to reject twice. And I like that area, right, as a potential breakout for the longs. So what I did with that is I waited for the 1 hour confirmation with a nice close there, good volume. And then I'm trying to get in on the slight pullback into the area or the pullback into where the candle actually closed, right? So what I'm doing then is I'm going to switch it up and see what kind of options are we going to buy? What kind of time frame am I looking at? Now, like I said, options have variables. That means that there are multiple different expiries that you can look at and multiple different strikes that you can look at. There's Greeks that have a play in these as well. So you don't want to buy options that are too far out the money, for example, because then what you'll see is the Greeks have an effect and you're just going to lose value very quickly. You don't want to buy too deep in the money because that means that they're going to be too expensive, right? They're going to cost a lot more. So there's a sweet spot. How do we find that sweet spot? So there's rules, and that's by reading the options chain before we dive into the order flow. So if we can read the options chain, right? We can read the options chain, one of these, right? We will understand number one, right? The Greeks, right? We have to understand these variables, right? Delta allows us to identify what the probability more or less is of the option expiring in the money. We have gamma, right? And also delta is the gain for a $1 move in the underlying. Gamma is the rate of change of delta, right? Because if delta continues to get deeper at the money or in the money, it's going to increase, and gamma is the rate of change in that. So it could both help and hinder the position. We also have theta, right? This is going to be important if we're doing short-term swings because this dictates how fast the option is actually going to lose value. Right. So if we're doing like 1 to 2 weeks of expiry, then you have to have a strong move in your direction. Otherwise, theta is going to eat away at the premium. And then, yeah, we have Vega, but I like to look at it as IV, implied volatility. What is the implied volatility of the position? And how could we use that to our advantage? Or how could we navigate that to potentially not take the trade, right? If IV is way too high, then we're not going to be looking at this trade, right? We want to see IV low. So once we understand the Greeks, right, we can make a better selected decision. Now, I focus on the delta a lot because the delta is going to tell me what the probability is of expiring in the money. I do like delta because it gives me a relatively good area to start selecting options, meaning that I look for a delta between 30 and 40%. And that means that's going to land us slightly out the money because 50% delta is at the money. So we're going to be slightly out the money. Right. And next, we're going to look at the open interest and the volume. So open interest and volume play on the liquidity aspect of the options. So if open interest is high, that means it's going to be fairly liquid, right? Ideally, volume is fairly high because that means that these options trade hands between buyers and sellers a lot, right? So that's going to be great. So open interest, I look for at least like maybe 2K to like 5K on the smaller end. And volume, if it's greater than the open interest, great, right? Because they're being traded a lot. But if it's not, I'm looking for around 50% of the open interest for volume, right? To around 100% of it. So if the OI, for example, is 5K, right? And the volume is 2K, that's fine, right? It's around 50% of it. And then what we're going to do is we're going to look at the spreads as well, because the spreads, we don't want too wide of a spread because that's going to kind of counterbalance these and say, okay, well, this option's not that liquid. We want to see, even for swings, I'd say max like $20 a contract, depending on what you're trading. For AMD, there's no reason for it to be less than that, right? More than that. And for Tesla, you might see like $1, $2, which is abysmal, right? So you gotta, in that case, look to play and get in 5 to 10% under the bid, right? So once we've identified that and we've identified AMD here, we assume that we're trying to enter around 159-ish, 159.30 on AMD, right? So that means that out the money options, right, we have 160, 162.50, 165, 170. And remember, we said we're going to buy 2 to 3 weeks of time value. That means that we're going to buy the December 10th calls, and we're also going to be looking at the December 17th calls. So between those two, we're going to look at these. So we're going to break down the order flow and see which ones look better naturally. So 160s, they're just slightly out the money at the time of the purchase. So that means they're going to be a little more expensive, right? They're going to be very liquid, and the spreads are going to be very tight. So these are going to be a little cheaper, right? The liquidity is probably going to be there, but the spreads are probably going to be a little worse than here and here because these are whole numbers. Now 165, right? It's a pretty sweet spot because not that expensive, right? Very liquid, good spreads. And I think we're going to look at the 165s for both of these. So 165s for December 10th were about $350 a contract, and these ones were about, $490 a contract. So with these, we can go ahead and look, okay, which ones do we necessarily need to buy based on order flow? What is the expected move of these, right? So with the one with the December 10th, ideally what you're doing is you want to move in that same day. You don't want to hold this for more than like a day or two because they expire in about 11 days it is. So you don't have much time because theta is going to start chipping away at you, right? Theta is going to eat away at the position. That means you need to move the first day that is about 40% plus. So luckily, these ones did move about 40%. They went to, I believe it was $4.95, $5 around a contract. So that's what they increased to. So they had a pretty solid gain. And these ones increased to about 670, so about 35%. So you can see that if you buy more time, right, the gain isn't going to be as drastic, right? Because there's not that much volatility involved. But which ones of these are great? So we have to go into our flow and we're going to use the unusual whales. I almost misspelled that. So we're going to use the unusual whales to find our flow and see if this is it's good or not, right? What are we doing with these? So what we're going to do, right? This is a beginner. If you're overwhelmed by this platform, don't worry, just drop some comments. We'll make some videos, but this is just beginner stuff right here. I just want to show you guys some of the cool stuff that you can find here and how you can use this order flow to confirm or deny your swing position. So what we do is we typed in AMD. And right away, you can see what the biggest orders of the day were, right? There were some bearish, right? There were some bullish. But you're going to see which strike is being attacked the most. Now, you can see December 3rd for most of the top 10, I guess, here are being attacked. Now, I don't want to swing this low, but you can see what the volume is. Super heavy volume, good OI. These are great, right? But you can see right here, 165 and 160s for December 17th, right? They're getting a lot of love too, right? Solid prices. So you also can see what the highest OI increases are and what they are based on a percentage here on this website. Now, here is the next step, right? The overall dark pool, right? So the dark pool with volume, what I like to do is I just look at the histograms and see when they're buying, right? How they're buying and if it's increased buying, so I can manage this based on a technical aspect. So today there was some pretty solid buying, right? It wasn't anything crazy like we saw in this burst, right? It's too close in the week, too early in the week to notice that, hey, is it going up? Whatever, what is it doing? But that's okay because overall we've still maintained a pretty sizable increase in the dark pool buying. So that's good, right? It's not something negligible down here for the dark pool. So we can consider that checked off just as a beginner precaution. Now what we're going to do is we're going to go into levels and the flow history. So what we're going to do in the levels here, this is going to be important because we're going to jump into the premium of 30K plus. So earlier when I was looking at this, right, this number was different because we're seeing bulls versus bears. Before earlier today, it was at 71%. Now this changes because there's different players that come into this market. So we've dropped bullish premium to only about 50%. Now, what also changed was December 17th bulls outweighed the bears 1.3 mil versus 400K, right? That's not the case anymore. The bears are now at 2.6 mil and the bulls at just over 2 mil. So the bears are taking over slightly here. But at the time of our position, that was not the case. And we can see what contracts, right, are getting some love here. The 165s, which is the contract that we want, is getting the most bullish love, right? So that means that we can go a little further out, right, in terms of time. But if we're looking at whatever time it is, we want to trade the 165 calls. Now, another thing that you'll notice here on the whales is that you can see the bullish premium jumped from yesterday. That's really good, right? We had a lot of call volume being bought and it's well above the average and it's well above the Friday's move. So there's a lot of bullish behavior here. They're attacking the right strikes. And overall, we're going to stick with that 165. So if we got the 165 for the December 10th, like I said, we're already at 41% and we have to take profit, right? If you're up 41% in a day, right? If you have $1,000 position in, has $400, right? You can take half of it, run, and let the rest of it go. Even for the December 17th, right? You may want to tighten the stops or consider taking some profit off. So with that, right? We broke down all 4 steps and we identified, right? Number 1, finding a trade, the technical analysis behind it, what you need to know to swing trade options based on technicals. Number 2, the options chain, right? A beginner's guide to what you should look for. Number 3, a beginner's guide to the options order flow, right? And what you should look for. If you want more info on that, just check us out at TRADEPROacademy.com. And then number 4, we also talked a little bit about dark pools. Now, going forward, you guys really need to know risk management. So like I mentioned, if it's up like 40% in a day, you need to be trimming some and looking to extend some of those profits in the later sessions. Just keep that in mind. You guys need to learn a lot about the risk management and journaling your trades. So with those very simple steps, you guys now have a great beginning background in swing trading options. So I really hope you guys enjoyed this video. And remember, if you need more information, community.tradeproacademy.com and also at tradeproacademy.com. If you guys enjoyed this video, smash that like button, hit that subscribe button, drop comments down below. What do you guys want to see? What more do you want to see? And we will provide. So thank you so much for joining us and we'll see you guys next time.